Hey everybody, welcome to Stockradar. Stocks on the move for another week. Today's date is the 22nd of the 12th, 2022. 3 more sleeps to Christmas. This will be my last video for this year. We'll be back early next year. And hopefully we're looking for a better year next year. It's been pretty miserable most of the year. Hi, my name is Richard Lee. I manage the stockradar.com.au website for you. Alright, things can change in a day. We've had a bit of a roller coaster week this week. That's why we focus on weekly data to avoid those massive smooth swings and to get some good perspective on markets are doing. Getting caught up in the day-to-day moves is a very difficult thing. The market is back in no man's land, and we'll have a look at the chart of the ASX a bit later on. Some of the health stocks we looked at last week continue to sour. CBA can't seem to break through. So we'll have more of the frustrating same at the moment. Thank God for the new year, and then we can make a fresh start and hopefully look for a better year. And hopefully our market will resume that long-term uptrend that we always love to see. Okay, we lost one stock pick this week and put our stock pick count at 33, so our breadth is still very weak at the moment. Don't forget to check our trading centre for an update on all our stocks that we cover on the ASX 200, okay? Now, the special offer I had recently, the promo, some people have rung up and said they missed it, unfortunately. So I'm going to extend this promo until Friday. So anybody who signs up between now and Christmas Day can receive an extra 3 months for a 12-month subscription or 4 months for a 24-month subscription. So once you sign up, email me and I'll add those extra months for you, 3 extra months, so you can get a little bit more added bonus for your value for your membership. Okay, so that's there for you. Let's have a look at the top 10 trades this week. Firstly, we've got A2M at the top there. Been doing very nicely, as is AMP. Bit of a surprise package there. Those two. QBE's broken out. Sparks recovered well. Waypoint's doing well again. Chorus is still doing well. LIC, NUF, Qantas and TNE. They're our top 10 ratings at this week, and they're all doing pretty well. So that's been a good sign there. So stock picks review. Our open positions are up about 12% on an annualised basis at the moment. We've got a couple of weak leaks in there. Stocks like ResMed and Aristocrat. So we're watching their stops this week, and we put an end to a difficult year. But as I highlighted a couple of weeks ago, there was a plethora of opportunities amongst those old quality beaten down stocks. And we're ready to catch those when they start rising and turning back up, and hopefully that will happen next year. So we'll look at some of those stocks again this week. And I have some special advice for you in this week's trading tactics, so look for that a little bit later on in the show. Okay, so what we first want to do now is go to the markets. And the Dow Jones, well, it's hit the challenging zone, and of course it's come back down. And we had a good night last week, but this certainly is an area where there is resistance in there. And certainly we've had a big rise here, so we might have a correction back. So it'll be interesting to see how far back we do come. Right back to here is not a good sign. Back to here and a turn up is a good sign. So that's what we're sort of looking for at the moment. We certainly had a big bout of selling last week, which was pretty heavy, pushed the market down a bit. Not too bad, it pushed the market down. So we're in that, again, in that no man's land between R1 and S1 on the Dow Jones, as we are in our market as well. The Nasdaq, it still hovers above its lows there. It looks like it's going to have back to have another test there. It recovered a bit last night. There's been some heavy selling here. The momentum is still weak, so it's still in a downtrend, the Nasdaq at the moment. Okay, gold, it's slowly been edging higher and higher. Not a lot of volume there. It's above the average, still edging higher. So I guess as it rises, we follow it, and as any stock come in on the gold sector, we take them, because who knows where it's going. It hasn't been an impressive move, but it is rallying, and the US dollar has been a bit weaker. Okay, copper. It also is starting to trying to make its way higher. It's making pretty hard work of it, but it's doing pretty well. A couple of good volume weeks back down here. Momentum's starting to ease back towards zero. We're above the average, so we're getting a mixed picture here, but slightly positive, I think, especially as we haven't broken this recent high here. So we're tracking higher slowly for copper at the moment. Brent crude, well, it's still remained in a downtrend. Okay, we keep getting hopeful with these rallies that come about, but we're not really making much headway on the upside here, and it is down from that 120 mark down to around about $80. So it's $40 off its highs there. And we've got some mixed volume here. The selling is probably building there. Momentum is weak, so still weakness on the crude front there. Now, our market, So let's just go to our market. ASX 200, as I said before, we're in that no man's land between R1, S1, like the Dow. We got into this challenging zone. We've found some resistance. The sellers have hit it. So now we want to see if these buyers are going to come back in and start supporting this. Momentum is pretty neutral at the moment. So everything's pretty neutral at the moment. So we can sort of go away on holidays and just have a little bit of a break, and without worrying too much about what the markets are doing. They're pretty steady at the moment. Okay, so that is the ASX 200. We'll just quickly look at the stock pick count. As it's down 33 to 183. 32 stock picks of 162 stocks and one ETF of 21 covered. So not a huge amount of opportunities there at the moment, but I guess that means there are more potential opportunities coming on board. That's why we always like to look at it. Portfolio update, no change there. Conservative portfolio is 5 out of 20, 25% equities, and both Energizer 5 and Energizer 10 are both full at the moment, 100% equities at this stage. Okay, so that's the portfolio update. Now we're getting some stocks. Okay, now I'm just a bit of a review this week because there's not a lot on offer. We've seen some stocks broke up recently. QBE, Treasury Wine's sort of rising slowly. EBOS looks like it's a good one this week. We've got A2M, A&P going well, but I just thought we'd look at some of these stocks here, which have been a little bit tricky this year. And really, I guess, although they've been tricky, there's an opportunity, and that's why we always take the positive slant on these things. So we've got CBA here, which is trend intensity rating of 0. It's once again had to try this. We did look at it last week, I know, but it's not telling us where it's going to go. So there's quite a few not telling stocks at the moment, which is a bit frustrating. But I had a long chat to a client this week, or email exchange, just a bit about, he's pulled back from the market quite a bit, and he said there's one thing he's learned in this market. There's two things he's learned. One is patience, and the second is patience. And he's so right in what he says, because sometimes we just have to be patient and wait for things to happen. And things like CBA and the next few charts are going to show you exactly examples of that. On the basis of what I do, which is trends and breakouts, there's nothing here on CBA for me at the moment. There's clear resistance here. When this breaks, there is an opportunity. Okay, and that's what I'm looking for. So at the moment, we may well see this come right back to here. When it got up to here last time, we didn't think this was going to happen, but it did. So it could still come back to S1, to 85, 90 bucks, possibly. But what we're really waiting for is a break out of this range, and as we're long traders, we only go along on the upside. So we're waiting for this R1 level to break. That's what we're looking for, okay? And it's not happening at the moment. Trend intensity rating is 0. BHP, also not telling. We're trying to get through this area here. Its trend intensity rating is +2. It's hit this area 3 times now and come back off it. This hasn't retreated too much at this stage, so it could still break. If it does, that's a good thing and a good opportunity for us. But at the moment, it hasn't done that. We've got some reasonable volume here. We've squeezed it up a little bit for you to have a bit of a look at it. Momentum is okay and it's above the average, so we still need the price confirmation on this one above R1. It could go next week, it could come back to here. We don't know. It's not telling us just yet what it's doing, although we have a slightly positive slant. Trend intensity rating is +2, but it's still in the neutral zone, and no trending attributes are there at the moment. So another one that's just not going to tell us what's going to do. Telstra's another one which actually has been quite sort of firm, if that's a good word, of late. And we've seen some good buying down here recently. But again, we're getting this area here up around $4.20, $4, which it just can't tend to get through. 1, 2. It's now having a third attempt here. The breakdown area is around 370. So that's the range it's been in for over a year now. So again, it's not telling us which way it's going to break. The trend intensity rating is +1 and it's neutral. A bit of volume here. This is just slightly positive, but it's rotating around the 0 level as it wanders through this trading range. And we're above the average. We are rotating around the average as well. So that's why I am being patient. Like my favourite member tells me, to be patient and wait for the break to happen. Don't anticipate anything, just let it happen. So you can see there's a few stocks here that are looking interesting. Then we can go to another one, which is Transurban, and this is a really big range, this one, but it really has been going in for a long time, for a couple of years now. But we can see really key areas of resistance up here, above $15, and good support down here, around $12.50. But all I do know is when it breaks, it causes significant change in buyer-seller behaviour. So if it breaks to the upside, then the buyers get confident, the sellers reverse their positions, and we potentially get a good swing higher. And when we get a range this size, the potential is fantastic. So I can't wait, but I have to wait until it actually happens. So these are things that may happen next year. If the market starts to resume its long-term uptrend, we could get some breaks up, but we don't know that yet, so we just have to wait and see. Trend intensity rating is -4 here, so it's a little bit on the negative side, but not too bad at this stage. I'm still working hard on this range at the moment. Coles Group is another one, rotating around an area, $19 to $16. Bang, 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 up and down. Let me just squeeze this volume out so we can get an idea of what we can see here. So there's going to be some fairly heavy selling here, not a huge amount of buying, a little bit of chipping away there. This is still negative, it's below the average, so we're still in this range here. And again, the trend intensity rating is -7 for this one, so we're not that happy about it. But again, this is what we're really focusing on, is this trading range. And again, patience is what we need there. Okay, CSL, well, you know what CSL, I've covered it a few times, but you know, unbelievably, it has been stuck in this range for 1, 2, 3 years now, between 340 and 240. A big $100 range, I know, but trying to trade that has been quite tricky, because if you can get these ones right, then good luck to you. But at the moment, we're getting a little bit of upside here, a little bit of potential here. It's failed again there a little bit, so it really isn't telling us much. It's not only volatile, it's difficult to read. There's no trend behaviour there, so we just really have to wait. I'm a trend trader, so I wait for trends to appear, I qualify them, and that's what I do. And at this stage, trend intensity rating is -1 for CSL, no trend, no trade. Okay, so that's CSL. Now I want to get a couple more exciting stocks for you. EBO, which I looked at last week in the health sector. Maybe this will encourage some of those other health stocks, which are looking pretty woeful, a lot of them. There's a couple looking a bit better, but most of them, like Sonic Health and stuff, are looking awful. But this one here, trend intensity rating +3, that was last Friday. And now we're seeing a fairly good push higher this week. I don't know what it's done today, but we've got some great volume here, and we've got some great momentum here. So again, a trading range, or sort of a trading range here, but if this was a trading range and I'm getting the break, this is the exciting period that I'm looking for. When I get that break, these sellers turn to buys, these buyers get more confident, and it pushes the price higher. So that's what I'm looking for. So EBOS Group is an exciting one. Another one, you know, trading is a difficult game, and everything is different. Every trade is different. And when I look at this next chart here, Spark, New Zealand, which was an entry here, it broke to new heights, it broke out of the trading range beautifully, and we thought, okay, we're onto something here, and sure enough, we had this horrible down week. Now, we were lucky in this situation that our stop didn't go off. We held our stop, so when your stop isn't hit, you never know, and this is quite an extraordinary recovery on some very good volume and momentum, and it's now making new highs. So we're lucky we're still on this one, because it did get savaged a bit here, but our stop didn't go off. So again, you know, it's about trading your plan and being true to what it says until it tells you to do something, because you never know. And Spark at the moment, its trend intensity rating is +10, and it's looking pretty good. As some of the other stocks are in that sector, Telstra's looking not too bad, Chorus is doing well, Spark New Zealand's doing well. So that telecom sector is actually up on the top of the trend intensity ratings at the moment on a sector basis, which is interesting. Okay, now I talked about A2M, which was, you know, it's been a fantastic stock for us this year. When we look at this one here, it's just gone from strength to strength, great volume. It's been a little bit of a gold mine for us since we went in here in late August, as it's just kept rising and rising and rising. And this could be a really good recovery stock next year. It will have its bumps and grinds, but it could be a very good recovery stock, because it's come from a very long way up, and it's now looking a lot better than it has done for a long time. AMP is the other one there, which we like very much. You know, it could be a good stock, but this really is a similar sort of situation with the demand. Even these long wicks here, you see where the sellers have hit it, and the buyers have brought it back up nearly to, it's been an up week for most weeks for the last couple of months, and trend intensity rating is +10. Go figure, AMP, the worst stock in the world for a long time, is now starting to recover. So it could also, its trend intensity rating is 10, so try not to think what you think is right or wrong. And I know there's a lot of different valuations about AMP out there at the moment. There was a guy at that Hearts and Minds that was very positive on it, and then there's a couple of other reports that came out from, I think, Eureka, saying the valuation was wrong. But, you know, it's hard to know. What I will look at is what the buyers and sellers are doing. That is the message that I get from the market, and at the moment it is going up. So that's where the place I want to be. So we're long AMP, which has been a good one. And the other one, which, you know, suffered a lot, you know, all these high prices, negative stuff about about Jetstar. You know, it's just been a very well sought after stock. Since it hit the lows around July this year, around 4.30, it is now above $6, and trend intensity rating is 9. It's broken out of that range, which is what we like. Now, this is now starting to look pretty good. It's starting to move higher, which is exactly what we want. So don't worry about sentiment too much. Sentiment's a fickle thing. and we've got to be a little bit careful about how we read that, because if we look down here, there is very, very good demand for this stock, and momentum also is kicking nicely higher. So we've got a very nice signal on Qantas, and we will stay with this stock while it remains above our stop. So that's a goodie. So there are some goodies out there if we're prepared to buy. And these last three were all stocks that suffered negative sentiment, big downtrends, and have now broken out to the upside. So that's a good one. So the other telecom stock was Chorus, which we know we've been following for a while. It again had a breakout, and this sometimes happens, a bit like the Spark one, which isn't quite as savage, but this came back quite a way after breakout. After these 3 weeks here, it looked excellent. Then this happens, and it's like despair, but you've really got to focus on what your stock picks are saying, or your stops are saying, and the stops didn't go off. So luckily we're still in that stock, and it's now making new highs and heading towards R1 up around 850, which is fantastic. We've got some reasonable volume there. Momentum is good, it's above the average, so it's giving us all the things that we need. Every picture is different, but if we look at the overall picture of perspective of trend intensity, it tells us, gives us the message of what to do. The ins and outs, we've got to be a little bit careful about reading too much into. Okay, so that's Chorus. The next one I want to look at is QBE, another stock that nobody's liked for a long time, and we have had a few shots at this, I must admit, but it's now broken out of this range. We're really stuck in this range for well over a year, in fact. And it's quite a tight range, 11 to 12.50. It's now broken out. The trend intensity rating is 10 on QBE. Volume has been quite good. Even these big days here, or the big selling day here, didn't make really a dent in the price, and that's a good sign. Momentum is good, and it's above the average, so it's getting a trend intensity rating of 10. Doesn't have to look like it straight away, but we have had a rally since the middle of 2020 from down around $7.30, and it's now up around $13. So that's about $6. So it's slowly edging its way higher and recovering, which is a good thing. The other one, which has been a nasty one, which had a real hit from China, but it's reassessing itself, and it's readjusting how it's doing its business. It's slowly getting investor confidence back into it, and it's now starting to rise. Volumes have been a bit mixed. Momentum's been a positive but flattish, which means the rise is steady. It's above the average. All the signals are right there, apart from volume possibly, but it has been a fairly thin sort of volume traded volume stock. But trend intensity rating is +8, and that gives us the picture of positivity, which says you should hold on to Treasury Wines Estates. So there's some stocks for you that I've looked at. You know, things aren't all bad. There are stocks rising. There are some potential stocks. There are some stocks we can wait and watch for, which are some great opportunities. So that's always the case at the moment. So there'll always be failures, and I know things like Aristocrat and RMD, which are current stock picks, are not doing too well. But that's a fact of life, and we must make sure that when we trade a stock, we still deal with it appropriately, whether it goes up or down. So when the stop is hit, you get out and you deal with it that way, and that's the right thing to do. Not every stock will be a winner, and if you look at my YouTube video on the 24th of November, where I talked about trading tactics, the win-loss truth, shows about the win-loss ratio and where the profits are. So the amount of wins and losses is not necessarily a good guide to how profitable your system is. It's the size of your wins and it's the size of your losses, and that's where you make your money. So let's look forward to next year's breakouts by leaders, extensions by A2 Milk and AMP, exciting breakouts by EBO, which finally may lead other health stocks higher, whatever else hits our radar. As far as the health stocks go, the demographic is always very good there. So I think there's probably some fantastic opportunities among those health stocks and those other beaten down stocks. So we really could be in for possibly a good year next year. Okay, so now I want to go to trading tactics, and I've got a very, very important message for you this year. And my advice is to take some time out with your family and enjoy your Christmas, because that's probably the best thing we can do at the moment. We had a pretty horrid year up and down. We've made a bit of money, but it's really been quite a difficult year. Not a lot of trends, but now's the time to spend some good time with your family and your friends and enjoy yourselves, and take a load off. Okay, so that's last week I was talking about stress-free trading, easy, fast and accurate. And this is why we want to trade next year. Try and make things easy for ourselves. Follow our trade plan. Don't stress about too many things. Make sure the decisions you have to make are made before the price moves. You're not waiting until after the price moves to make a decision, because then you're doing it on the fly, which is not such a happy event for most people, and it's very stressful. Okay, so what's happening at Stockradar? There'll be no newsletter this month. The next one will be out on the 31st of January. I'm going to take a holiday too. Don't forget our stock market blog. Subscribe to the weekly updates there. Stock Market Say It As We See It ideas and weekly market YouTube video updates. There's plenty of articles on their blog on trading, discipline, psychology, portfolios, probabilities and risk, and a complete library of information that's all free to you. Articles that I've written over many years. Okay, so that's really it for me today. Look, Merry Christmas from me and the Stockradar team. I hope you have a great time. Stay safe. If you are in the market, watch your trends, heed your stops, give me a call if you need any help, not necessarily over Christmas, I need a break too, but I'll see you all again for next year's insights and a new YouTube video format will coming out next year. So Merry Christmas to you all.